Okay, question 1. Which of the following statements on true and fair is correct? Financial statements are true and fair when they are balanced. That is not necessary because balance, you will still have mistake that. They are so-called hidden error. They wouldn't be identified by trial balance. True means that all the figures in financial statement are based on actual amount without estimation. Then what about depreciation? I told you before, depreciation is merely you are estimating. So not necessary it must based on facts, actual figure. We can use estimation also as long as the methods are suitable. So this is wrong as well. Financial statements are true and fair when they do not contain omission or misstatement of any amount. The keyword here is any amount. If you read my slide carefully, omission or misstatement, if it's important enough that it will affect users' decision. So if you say misstatement by 1 ringgit or misstatement by $5, compared to the total sales of 1 million, that is not very important because the misstatement amount is very little. So we cannot say financial statements, they are 100% correct because sometimes there still might be some human error there that is unavoidable. So as long as your omission or your misstatement are not that important until it can affect users' decision, we can still accept it. So this is wrong as well. So the answer should be D. Fair means financial statement use reasonable judgment without bias. So you are neutral when you are giving or preparing your financial statement. You are not helping any other party. You are neutral. You are standing in the middle. Moving on. Question 5. Now, for questions that I highlighted in pink color, these are all CBE questions. CBE meaning they are actual exam question. So please note this carefully. Who knows you will see them again in your actual exam. At 31st December 2020, Harry had only 2 items in inventory. Data relating to the items are as follows. So according to IAS 2, what is the value of Harry inventory at 31st December 2020? So this is the financial year end date. They are basically asking you what is the closing inventory value. So as far as you know, closing inventory, there is only one method based on cost and NRV. And we take whichever that is lower. So in this case, let's compare item 1 first. So item number 1, purchase cost 3524. This is definitely cost already. Expenditure on improvement before the financial year end. What does it mean? Meaning before it becomes your closing inventory. So whatever amount that you spend just to make your inventory better, these are all inclusive as cost. So the cost of item 1 actually include 3524 and 220. So you bought that item at 3524 and you further spend 220 to make it better. So right now the cost of your inventory should be 3744. So likewise for item 2 is the same. You bought at 4158 and you spend another 588 to make it better. So the total cost for item 2 will be 4746. Then what about the NRV? NRV formula is the estimated selling price minus all the estimated cost of selling, the cost of improving the asset so that you can sell it. So expected sales value 4,600 for item 1. So you expect to sell it at 4,600. But for you to sell it at 4,600, you need to spend another 80 to improve it before you can sell it. Maybe your product is not that nice. So you must further spend money to make it better so that you can sell it at $4,600. So this is so-called the cost of completing the goods because it is spent after the financial year end date. And therefore, to find NRV, we should minus. So 4,600 minus 80, you will get 4,520 for item 1. So for item 2, it's the same thing. Expected selling price minus the cost of improvement to find out the NRV of 4,540. So by comparing cost and NRV for each item, item 1 we will take cost which is lower, and item 2 we will take NRV which is lower. So when you add both of them together, the total closing inventory value should be 8284. This is the correct answer. Moving on, question 6. A business prepared SOPL reported profit 30,000, but then discovered that opening inventory undervalued by $3,000 and closing inventory overvalued by $4,500. So what is the correct profit for the year? Now, if you got this question wrong, most likely you don't understand the relationship between inventory and profit. This is what I told you in class before. When you're opening inventory undervalued, how will it affect your profit? Then you must know relationship between inventory and profit. Opening inventory plus purchases minus closing inventory to get cost of sales. So imagine your opening inventory undervalued. Undervalued meaning you understated by $3,000. So if that is the case, we are supposed to increase our opening inventory by $3,000. So when the opening inventory increase, your cost of sales should increase also. This is logic, math relationship. If this increase, your cost total increase. So when the cost increase, logically, when your cost gets higher, your gross profit tends to be lower. So imagine other income and expense no change. When your gross profit decrease, your profit for the year decreased by 3,000 also. Moving on, I'm going to use another color. This is for closing inventory. When closing inventory overvalued, so meaning you overstated your closing inventory. So when you do correction, you're supposed to reduce closing inventory by 4,500. When your closing inventory reduce, you are minusing. So when you minus lesser, your cost of sales answer tends to be greater. So when your cost increase, again, logically, your gross profit tends to reduce. And if there's no change to other income and expense, profit for the year reduce as well. So now, looking at the two effects, both actually reduces the profit. So from the original profit of 30,000, reduced by 3,000 and reduced by another 4,500. So therefore, the answer that you got here should be 22,500. Now moving on. Question 7. For the year to 31st March, Celine draft final account report a profit of 86,528. However, 5,760 of revenue expenditure incorrectly classified as capital expenditure on equipment. So by right, it should be revenue expenditure. Revenue expenditure means expense. But it was recorded wrongly as capital expenditure, meaning non-current asset. So Celine depreciate equipment straight line basis 6 years and charge a full year depreciation in the year of acquisition. When the error is collected, what is Celine revised profit? So the original profit was 86,528. So let's see what happened to the profit. Number 1, suppose you should record as expense but you did not record. So when expense increase, profit should decrease. So I should reduce my profit first by 5760. This is because expense increase, so profit decrease. Moving on, because you wrongly recorded as non-current asset, and therefore you wrongly depreciated your non-current asset also based on straight line method. So you are not supposed to depreciate, but you depreciated. So if that is the case, we must find out the depreciation how much. So 5760 was the cost. So I divide by 6 years. So 1 year, the depreciation was 960. Again, I'm not supposed to depreciate it. I'm not supposed to. So when I do correction, depreciation is expense what? So when I do correction, I must reduce my depreciation expense and therefore profit should increase. So when profit increase, I'm supposed to add 960. Okay, this is because I wrongly depreciated. I'm not supposed to depreciate. So now my corrected profit should be 81728. Okay, moving on to now question 17. Again, I highlighted in pink color. This is CBE question, but I'm not going to go through the question with you since more than half of you got it correct. So if you got this wrong, please understand how to get the correct answer. Moving on to question 18. When Mia prepared her final account, she overstated accrual by 690 and understated a prepayment by 430. So how this error actually affect Mia capital balance? So to answer this question, I will have to know my accounting equation. So my accounting equation is asset equals to liability plus capital. Okay, so now I want to know what will happen to my capital. If my accrual was overstated, accrual is liability. So if you overstate your liability, okay, so imagine when your liability overstated, this one overstated. So what will happen to your capital? Your capital should be understated. Otherwise, you can't make it both side balance anymore. Moving on, understate prepayment. Prepayment is my asset. So when my asset understated, so what will happen to my capital? My capital understated also. Otherwise, both sides cannot be balanced. So now you notice, oh, actually both understating my capital. One understated by 690, another one understated by 430. And therefore, the total understatement should be 1120. Now, moving on. Again, question 20, CBE question, actual exam question. Moving on to question 21. A business has calculated its cost of sales for the year, 144,000. Okay, so perhaps I'll write down first. This is the total, the total cost of sales, 144,000. The business revenue for the year include, so this is not the total revenue yet, just part of the revenue, include 2016 being the amount paid by the owner into the business bank account for goods withdrawn for personal use. And for this revenue, it was calculated by adding a markup of 12% to the cost of goods. So for this revenue 2016, it's like they sell it to the owner. Okay, they sell to the owner, business sell to the owner, but they sell at a much cheaper price. So how much is the markup? The markup is only 12%. So it's like they sell to the owner, they give discount like this. Okay, so they sell at a much cheaper price. So the profit margin of other goods are 20%. So if you sell to your owner, I give you cheaper 12% markup only. But if I give it, I sell it to normal customer, I will sell it at margin 20%. So now it's asking you, what is the total revenue for the year, the total sales? Okay, of course, I already know part of my sales is 2016 already. Okay, this is the one that I sell it to the owner. But I do not know what about the sales of selling to normal customer, because to find total sales, I'm supposed to add up. Okay, the one sell to the owner and the one sell to normal customer. That I got the total sales one. But now I only know sell to owner, I'm actually earning 2016. Then sell to normal customer, how much I earn. So first of all, I have to find back first. How much is the cost of sales of selling to the owner? Because why? The total cost of sales included this also. So let's use the markup. So the markup is gross profit over cost of sales equivalent to 12 over 100. Okay, but in order for me to use the sales figure, I have to convert this into margin. So 12 over 112. So sales equivalent to 2016. And therefore, my gross profit equivalent to 216. So once I know my gross profit and sales already, I should know my cost of sales. I just minus. So the cost of sales is 1,800. So meaning the total cost of sales of 144,000 included 1,800 of cost that I sell to my owner. Okay, so now I'm going to find out, so what about the rest of the cost? So the balance COS, I'm going to take the total 144,000 minus 1,800. So the balance here I have 142,200. This is the balance cost of sales to normal customer. Okay, then from here, I need to find back how much is the sales. So I'm going to use margin because to normal customer, they told us the margin is 20%. So gross profit over sales is 20%, which is 1 over 5. But I do not know gross profit. I do not know sales how much. So I have to convert them into markup first, which is 1 over 4. So my cost of sales is 142,200. And therefore, from here, I know my gross profit is 35,550. Then when I add up these two, I should get my sales of 177,750. This is the sales to normal customer. Okay, then I will record here, sell to normal customer, I earn 177,750. So what should be my total sales? My total sales should be 179,766. So the answer should be boy. Okay, moving on. Question 23. Again, this is the actual exam question. Moving on to question 24. A business import machine from Korean and the invoice show the following. So you are asked to calculate the annual depreciation. That means 1 year depreciation. So before you can calculate depreciation, you must know the method first. So the method is using straight line method, 5 years with no scrap value. So in other words, we have to apply the formula for straight line method, cost minus residual value divided by useful life. Okay, so let's start with the cost. Costs include the machine price, the delivery fee, maintenance, this is revenue expenditure, it's never a cost. And also incurred import duty, this is also cost, pre-production testing cost as well, for 4,000 each. So over here, 4,000, another 4,000. So 80,000 plus 2,000 plus 4,000 plus 4,000, total cost 90,000. No residual value, so straight away divide by 5 years useful life. And the answer should be 18,000. So for this question, they are testing whether you understand capital expenditure or revenue expenditure. If you got that wrong, please do your revision. Moving on to question 31. This is also actual CBE question, actual exam question. Question 36, actual exam question as well. Moving on to question 37. This is a very simple question and I got a shock that more than half of you got it wrong. Rashid held the inventory at 30th April 2020. So what should be the closing inventory balance? So asking for closing inventory. Again, there's only one method. Compare cost and NRV and take whichever is lower. So cost apparently is 13.5 already. So how much is the NRV? Expected selling price minus selling cost. So the NRV should be 12.5. So you know to take the lower. So I have to take 12.5 and multiply total 200 unit. So the answer here should be 2,500. Moving on to question 39. Jordan business closing inventory at cost amounted to 284,700. So you are asked to find out the closing inventory value. Okay. So you are given the total cost. This is the total cost, 284,700. So included in this cost, what do you have? We have coat, we have shirt. So let's start with the coat. So let's find out the cost and also the NRV. Now for the cost, it costs $80 each. So it should be simple. $80 multiplied by 400. So the cost of it, 32,000. And sell at the normal price of 150. But due to defect, they have to sell at 50% of their normal price. So meaning half price, $75. So that is the selling price. So estimated selling price, $75 multiply 400 unit. Okay, this is your estimated selling price, but don't forget, you still have to minus the selling expense, 5%. So 5% of this total, so minus 5%. So the answer, 28,500. So for the quotes, very simple. You have to take the NRV. It's so obvious that this is the lower amount. And next one, for the skirts. So the same thing, we have to compare cost and NRV. So again, 800 unit and 1 unit costs you 20. So 20 multiplied 800, that's 16,000. And the remedial work costs $5 per skirt. Remedial means like you have to like repair a bit before you can sell. So it's $5 per skirt and selling expense total 800. And they sell it for $28 each. So if you want to find the estimated selling price, $28 for one, multiply with 800 unit. And we have to minus the remedial work for each skirt. So again, remedial work is $5 one. So multiply 800 unit. Then only we minus the total expenses, selling expenses of $800. So the NRV here should be 17,600. And if you compare, you should take the 16,000. And don't forget, these two are just part of the total cost, you know. So the total cost, you still have balance cost. So how to find the balance cost? So we have to take the total minus the coat cost and the skirt cost. So 284,700 minus 32,000 and minus 16,000. The balance cost is 236,700. So for this 236,700, you don't have to compare with NRV anymore because you are not given the NRV information. So basically just take this one plus coat NRV plus shirt cost. Sorry, not shirt, skirt cost. And therefore, the answer for this is 281,200. Now, moving on. Next one, question 40. Sandy is a sole trader whose accounting records are incomplete. So what was the value of sales made in year September 2019? All the sales are cash sales, so no credit sales here. And during September, this amount was bank, but this amount included sales of old machine, meaning include disposal already. So also during September, Sandy paid wages and then you have this much. So I believe you have to open cash account for this question. So I'm going to just draw a cash account here. So let's start with the opening balance. So in the till, 1st September, you have 250. So that is the balance BD 250. Okay, end of the month, you have 350. So we know cash must be debit balance. So BD here and therefore CD on the credit side. Okay, then let's see what happened during the month. 34,200 was bank. So meaning they actually so-called transfer 34,200 to the bank. Okay, to the bank. So in that case, I should reduce my cash account 34,200. But please remember, this amount included disposal. And also paid wages 3,500 and drawings 1,500. Okay, so now you're supposed to find out the sales because all the sales are are cash sales. So when you balance the account, the sales amount is 39,300. But please take note, this amount already included the sales of old machine, the sales of NCA. So if you want to find only sales, sales is selling to customer. When you sell your non-current asset, we don't put in sales account, we put in disposal account. And therefore, I should remove the 3,250 from the 39,500. So my sales to customer is only 36,050. This is the correct answer. Okay, once again, selling non-current asset, don't put in sales account. I never teach you this before. Selling non-current asset should be in disposal account. When you sell goods, then only sales account. Okay, continue. Question 41. Now, this is also actual CBE question. At the end of 2015, the following are included in the financial statement. So for this item, what total current asset should be included in the statement of financial position at year-end 2015? Current asset, Okay, so number one, on 1st January 2015, this year, the business lent $12,000 to a worker. And this is repayable next year, year 2016. Now, it's kind of simple. When your customer owe you money and they have to pay you next year, it's current asset what? That's why we put trade receivable under current asset. So now it's the same concept, just that it's not customer owe you money. It's your worker owe you money and has to pay you next year. So current asset also. And on top of this 12,000, the principal amount, you are charging them 2% interest also. And the 2% interest, the employee has to pay on that date as well. You can see here. So meaning next year, the employee has to pay you the 12,000 principal plus the interest. So the interest here is also current asset because has to pay you next year. Meaning you are supposed to receive it next year. It's like receivable. So 2% of 12,000, that was 240. So I have 2 CA here already, 12,240. Number 2, the business paid annual insurance premium. Annual means 1 year. Until 31st August 2016. Your year end is 31st December 2015. They pay until next year already. So this is prepaid. Prepaid expense, current asset also. So how many months they prepaid? They prepaid for 8 months because paid until August. So 9,000 divided by 12 multiplied 8. And therefore, the prepaid amount here, 6,000, current asset also. Move on. In January 2016, next year, the business received rent from tenant 4,000, covering 6 months to 31st December 2015. Look carefully. The $4,000 by right, you're supposed to receive in this year. But your tenant did not pay you this year. Your tenant pay you only next year. In other words, in year 2015, your tenant still owing you rental. When people owe business money, it's asset what? So the $4,000 is also current asset. So you have 12,240, 6,000 and 4,000, and therefore your total current asset is 22240. Moving on, question 42. Now, question 42, I'm not going to discuss here anymore because question 42, I did it in class already. So this is supposed to be a bonus question for you to earn marks. But yet, if you still got it wrong, meaning you don't even understand my explanation in class. So please look at my working and try to figure out the answer. Question 43, also the same thing. I already discussed this in class. And in fact, this is a homework given for you all. So once again, I'm not going to discuss here anymore. You figure it out the answers on your own because I already explained in class before. Moving on to question 46. Janice has the following entries in her rent account for the year ended 31st December. So the bill for rental, blah, what is the profit or loss charged for rent for the year? Okay, so in that case, I will just open a rent account. It's expense, so debit increase, credit decrease. So I will move on with steps. Start with opening balance. So opening accrual. So we know this is current liability. So BD on the credit side. Then during the so-called year, they make payment 5,100. So simple. Debit, rent, credit, bank, 5,100. Then third step, charge to SOPL. So it's supposed to be on the minus side. And this is the amount that we're supposed to find out. So what is the closing balance here? Your year end, your financial year end is 31st December 2015. But the bill for rent for quarter means 3 months. Ended 28th February 2016, 1,500, not received until 1st March. So meaning this bill, 1,500, you are supposed to receive on February, actually included February 2016, January 2016, and December 2015. And December 2015 is actually your current year. In other words, you are supposed to pay in this year for December 2015, but you did not pay because the bill you're going to receive only next year. So this is our closing balance already because we are still owing for December. So 1,500 for 3 months, that means 1 month, 500 lah. So still owing, so this is accrued expense, liability. So balance BD on the credit side and balance CD on the debit side. So balance the T account and you should find out the answer for SOPL 5175. Okay, moving on. Question 47. This is also a CBE question. Question 49. This is CBE question as well. Harvinder is registered for sales tax. So meaning he can charge, okay, customer sales tax. He can claim back if he buy from sales tax business as well. So his customer and supplier are all registered for sales tax. So meaning he can charge, he can claim sales tax. The tax authority increased the rate from 18 to 20. So sales tax increase. Which of the following is true as a result for the rate increase? Number 1, his customer will have even higher purchase figure in their SOPL. Nothing to do with your purchases, what? his customer purchase, when his customer record purchases, his customer recorded debit purchases, debit sales tax payable, credit, let's say payable or bank. So if the sales tax percentage increase, is only increasing the sales tax payable account. Your purchases account no change unless the cost increase. Number 2, his sales figure will increase in statement of profit or loss. This is wrong also. It's the same concept. If he record the sales, he would have debit, let's say bank, he received money already. He will credit sales account, but he will credit sales tax payable account also. So it's the sales tax payable account that is going to increase, not the sales account itself, unless your selling price increase. Number 3, his purchase figure will increase in SOPL. Again, this is similar to number 1. His purchase figure is not going to increase, but instead is the sales tax account supposed to increase. Number 4, his sales and purchases will be unchanged. So the correct answer should be number 4, 4 only. So please understand the double entry, how to do sales tax. If you don't grab the concept, you can't answer this question. And the last one, question 50, this is also actual exam question. So once again, those that are highlighted in pink color, they are actual exam question. Those that are circled, more than half of you got it wrong. That's why I go through the discussion here virtually with you. And the rest of the question that I did not discuss, meaning more than half of the classmates got it correct. So please ask around, or please try it out on your own how to get the correct answer. That's all for my discussion for PT2. Thank you.